Those are the ways that people need to really look at money. So that's my take on financial literacy.
Now, there's something that I found very interesting that you mentioned, the idea of that being hidden play in terms of why we have 120 digital lenders as of 2021, post-COVID, when people are being unable to borrow money. As of January of 2021, at least 4 million Kenyans were listed in the CRB as defaulters of digital loans especially. So of course, there now comes a question of data privacy, and this is twofold. So let's begin with the first part of it, yeah? The sharing of information, yeah? One of the most notorious applications is, of course, as has been advertised previously, is WACHTRA. So the idea that guarantors, you need to present guarantors, it's in, I think, their 8th clause if you go through their terms and conditions. And interestingly enough, when you download the application, you do not automatically go to the terms and conditions first. You first go to the loan part. They show you how much you can borrow, and then now you have to start looking for terms and conditions. As a lawyer, is that a legal practice where such information, such crucial information, is hidden up till the point of accessing the loan?
I will answer that simply. It's like signing a contract before you know the contents of the contract, you know. And I think any layman can see the problem with that. The moment you're pressed for cash, you need the money, and then these people here, they come and tell you, you know, we can be able to give you this amount of money, and they come in a very subtle way. Nowadays, they even use celebrity, like Zenka, I saw using some very prominent faces to market the app when it first launched. So the moment they come in this, you know, they come nicely and telling you, you know, those seductive messages, as I like to call them, pressed for cash, need school fees, worry no more, or cash got you, you know. So you go there, you look at the loan, but then a lot of Kenyans have this problem. We do not read terms and conditions. How many times have you gone through terms and conditions? Accept.
And you just accept.
You know, we don't go through the terms and conditions, and therefore, at this point, I tend to blame both parties. One, if the fault on the lender side is they should make the terms that are, you know, that are more strict, the terms that are a little more demanding, the ones that will actually, you know, bring all the debt shame, things like guarantors and access to your contacts, access to your GPS, access to your messages and things like that. Those are things that, you know, they should be able to bring them more clearly so that the moment you're signing that contract, you know what you're getting into. But then I would not entirely fault them. I also fault the lenders at some point, because if you look at our law, I wouldn't say our law is too vague. Our law also provides for such safeguards.
Let's go into the specific of the safeguards. Whenever you're looking at the law of contracts, for example, if you've just joined us or if you've experienced a technical hitcheries, we're really sorry about that. Let us look at the specifics around when you're getting into a contract. Of course, one of the things that I would presume, not even being a lawyer, common sense would dictate that if someone is making a contract, especially when you're saying financial inclusion for the mwananchi on the ground, ideally it should be in a language they understand. A lot of financial apps do not put their contracts in Swahili and English. You see it in English. What does, even if you would want to read with your best intentions, you're pressed for cash, you want money, it's in English, you do not understand anything. So can we really transfer that as a fault of, you know, the person who's on the ground?
No. You cannot do that, because one, if this is your target market, you have to make sure, one, your advertisement or your communication reaches that target language they understand. If it's someone who is not able to understand English, there has to be a translation. And if you look at most of these apps in other countries, like for example, I was looking at Russia, they will always have it in Russian, and then they'll have it in English. And if you look at South Africa, for example, they'll have it in all the 12 languages. But I don't want to say they have found their target market as naive, so they know we don't, they also know we don't read the terms and conditions.
Now, that transfers the questions too. Yes, there has been a period where people did not read terms and conditions, and it happens a whole lot more often than we'd care to admit. But then there's also the element for a number of apps, especially in the US, especially those that you can access through your Play stores, have a time limit before which you cannot accept terms and conditions. Based off of behavioral studies, they know this is the amount of time an average human being should take to read terms and conditions. And if they consent before that, they know they have not fully understood, and that still leaves liability on us. So the question is, why are we not seeing a revision of such things when it comes to digital lending? When you're talking about, yes, there are altruistic intentions, do you feel like there's the deliberate effort to ensure that some of these things are not put in place for purposes of business?
100%. Actually, I definitely agree with that. Most people, well, most of us actually, it's even hard for us to know what to expect in the terms and conditions. It's hard for us to ask for the terms and conditions. You know, it's no fault of our own to some degree. I mean, our educational system has not provided such leeway. You know, unless you've done business or law. In university, it's very hard for you to understand that, hey, in a contract, this needs to happen, that needs to happen. So even in the business context of it, you find that we are definitely going in the wrong direction.
Okay. So now, back to the lawyer in the room, So outside of the whole idea that sometimes you do not have the capacity to understand and whatnot, there are legal questions around the contracts that are existing, especially in digital lenders apps. I took my time to go through one of them, and in very small fine print, they say that if you do not pay your loan, you're going to incur a charge of 2% over and above the fee every other day. Interestingly enough, I took my time to go through all of the terms and conditions, and not once was the interest rate being incurred mentioned.
Yes.
What does that mean legally for us as Kenyans? That yes, we'd want to fault Kenyans for getting into contracts, but looking at that, can your typical person who has defaulted on a loan and had to pay severely for it take a borrower or a lender to court? I mean, take a lender perhaps to court on such matters?
Actually, yes, you can take them to court. And if I were maybe the lawyer for whoever is offended, I would argue it simply. One, we have the Constitution under Article 31, which provides for right to privacy, which should not be infringed. And then when you go to the Data Protection Act, we have Section 30, subsection 1, which provides for one major component, consent.
Yes.
And if you read it, it says the consent has to be unequivocal. And the consent has, you know, it has to be understood by whoever is giving you that consent to get the data or to share the data. So the moment they come in and they get your consent, but it is not unequivocal, you actually have a claim simply on that ground alone. Yeah. So I just don't think most people are enlightened, not necessarily financial literacy, but even on the legal avenues or the legal options that they have if their right is infringed. Some of them don't even know they have such a right. Some of them, actually most of the Kenyans have not even read the Data Protection Act, so they do not know. And I would not fault them for that, because if I were in the position of the data lenders, the first thing is to give them the terms and conditions, and secondly, how are their rights taken care of as regarding the terms and conditions we're giving them. But they're not doing that business-wise.
Okay.
Sorry, I just want to add on to that. And I was following up on what Patrick Njoroge, the CBK governor, was now proposing in terms of having an ombudsman, you know, just to oversee everything that's going to happen in this space, you know, because there's been a huge gap between how the CBK is handling it and what's really happening on the ground. Yeah, and for them, they were proposing that they'd have someone, an investigative body. So in case someone wishes to have claims like this, hopefully in the upcoming months, they'll have that opportunity in that space, you know, to go and actually get an investigation done. So
just in case you've missed that, in the instance that you have your rights being contravened, for example, when you have borrowers that want you to get into contracts where you don't know exactly what you're signing and yet you're under some certain duress to say or to press consent, to accept, without which you will not get access to the service, then ideally you do have a legal case to talk about. The part 2 of the data element was data theft. what is the data that we're looking at whenever we're looking at constructing an algorithm that decides who gets data and who doesn't? Like we've said, it's not your typical brick and mortar. You do not walk in, provide your income statement, you do not provide your KRA pins and whatnot. So ideally, we're looking at social data. You're looking at restaurants someone went to. You're looking at GPS location, M-Pesa messages, calls, logs, transactions, etc., etc. Do you feel like this is particularly sensitive information that could very easily be monetized? We've seen it happen before, and do you feel like that could potentially be the case, which would explain why, despite us seeing a dip in the number of people who are paying back their digital loans, we are still seeing more and more companies coming up? What do you feel, Charles?
Yeah, definitely. I mean, most of these companies, especially the ones that are foreign, have their databases in other countries. They don't even host them in the country. So you find that all the data that they see could easily be monetized out there, and you would not have a single clue. All you'd see is one day you're browsing and, hey, but I wanted this belt, so now
So algorithms being used to market.
Exactly. It's a huge concern. I mean, that is a lot of data that you have on one person. And now you're targeting, well, 4 million people so far now using the learning spaces. It's definitely going to be something to watch out for, yes.
I think one of the things that people usually really underestimate is exactly where some of these companies come from. When you look at Tala, for example, its biggest investors are PayPal Holdings and Female Founders Funds, yeah? When you look at Branch, for example, it's called Ventures and International Finance Corp. Any of this are in any way, shape or form Kenyans. In fact, almost 71% of the digital lenders existing in the Kenyan space are not locals. And therefore, there is a very high probability of your data being shared out without your consent. Are there safeguards? But before we answer that, I'm going to go through some of the comments that you guys have brought out in this particular conversation. But Roberta says, Mshwari is like that friend who will come through for you immediately when you're in need without giving excuses or talking behind your back after lending you. Butter, you should get an advert for Mshwari. Mshwari, there's someone looking for a job. Borrowing Peter to PayPal is a very common phenomenon by Eric Theory. We're talking about Okash, Tala, and others are like village drunkards who go around the village exposing people's secrets. Well, that did not come from us. We may not share similar sentiments. Anyway, so now let's go back to the whole element of data protection, yeah? There are clauses in the Data Protection Act that prevent someone from sharing your data, especially with third parties, especially outside the country, without your consent. Do you feel like we have some of those safeguards in place? And do people fully understand some of those safeguards such that now we are having digital lenders running amok in our space when it comes to data? Okay,
that is a very problematic area for one reason. One, yes, we have safeguards. We have the Kenya Information and Communication Act, which prevents information, data that is collected in Kenya from being taken to other countries. But then here is one problem that presents itself, and it's very glaring. Just like you said, some of these companies are not Kenyan.
Yes.
One, a company is a person on its own, right? And it takes the form or the nationality of the country where it is incorporated. And then now let me bring you back to the Data Act and all these other laws that you're mentioning. They are specifically for the Kenyan jurisdiction.
Context, yes.
So this is a company that is not Kenyan. How exactly do you expect to subject it to laws? That is the problem.
That
so in as much as
a huge problem.
Much as we have the laws, and I tell you for sure, the laws are there to power over, and that is one advantage they have over our Kenyan laws. So we can make as many laws as we want, but we cannot force them to comply. And that is actually the problem we're having with even regulating them, because they are not our own. So it's very difficult to subject them to Kenyan laws.
Let us go into the element of regulation, yeah? When we talk about regulation, of course, one of the things that we've always had is the struggle in terms of regulating some of these digital lending apps. We do not have a regulatory framework that applies whenever it comes to digital lending apps, which of course has always been hypothesized that if we had a regulation in place, yeah, then probably some of these things would not be happening. Do you feel like as Kenyans we have had a regulatory lapse, such that the only reason why these things are happening would ideally be as a result of regulation?
I wouldn't say there's a causality and effect to it, but I would say that that is a big chink in the armor when it comes to digital lending spaces. So, for example, like with what the CBK governor was pointing out is technology is moving at a very fast rate, and our laws are still a bit outdated, you know. And hopefully, as Parliament now has already pushed it, and National Assembly hopefully will, you know, come to put it into, to enforce it. But that would just be the stepping stone, I believe. The next phase of it would actually be forcing now all these companies to be under CBK, for example. And that might be a bit tough because they would have to operate as banks. And now that's where the difficulty comes about. Yeah, because for you to be a bank in this country, you need to have a capital base of 1 billion. That's a minimum that you need. And now most of these banks, most of the digital lending spaces, they don't have that amount of money, you know.
Well, interestingly enough, I think this is where we point out that a lot of digital lending apps get funding in millions of dollars every other time. Do you know that in just 1 month, a lot of the digital lending apps collectively have usually loan out no less than 4 billion in a month? That is way higher than a lot of brick and mortar banks. So the question then becomes, do you really feel like regulating, especially some of these digital lending spaces, is going to create some sort of crunch in terms of them efficiently continuing to work in this country?
When with
in light of that information, yes.
Yeah, with regulation, it would mean that now they'd have to have interest caps. So yes, for sure, it will definitely bring a cash crunch, because if I'm already making 7% interest per month as a company, why would someone else come and tell me I need to have 14% per year? You know, so of course they're going to shift their services now to probably other countries. So in light of that, I'd say the capital needed and all the other regulations that are needed by CBK would definitely put them at bay. As much as most of the executives claim that they want to partner with CBK and all this, it's like saying, okay, I'm making so much money, but my brother here is crying so much. Let me give him a bit. You know, let me give him some crumbs. So it's going to be an interesting space, honestly, to look out for. Yeah.
Okay. The interest caps, a lot of the interest rates vary from between 43% upwards of that, especially when it comes to digital lending apps. Do you feel like regulation is going to hamper their business activities, or do you feel like if it did, then good riddance? We were not even down for the 43%.
I agree with you too. They should be regulated, but the regulation should be different. You know, when you look at Kenyan dynamics, our country has been so focused. We have deposit and non-deposit transactions, right? And our country has been so focused on regulating deposit transactions. And this is an non-deposit transaction essentially, because I don't have money in the bank, and then you know how banks work. So one, we have to acknowledge that they do not work as banks. They do not work as microfinance companies, and therefore their regulations should not be the same. The same way we acknowledge that microfinance companies do not work the same as banks and regulated them differently, we should have a separate regulation for them that fits them. One, there are certain aspects of their business that are good, which is, you know, bringing credit closer to everyone in the grassroots. We should not take that away from them. Kudos to them. The other thing, the only thing we can do when it comes to regulation is put measures that ensure there is enough financial literacy, and that includes what you are saying, even in a language that everybody understands. And another thing is to ensure that they do not take advantage of the loopholes, especially when it comes to data protection and their areas of jurisdiction and areas of incorporation. So yes, I agree they should be regulated, but no, I don't think they should partner with CBK or be regulated under the Banking Act. They are not banks. They should not be regulated as such, because hiyo ni kuwafinya.
Yeah, it can kill innovation.
Let me throw a spanner in the works. We'd want to say, well, curtail innovation. We are curtailing 43% interest rates. However, let me throw a spanner in the works. There is something that is called the Guidelines for Responsible Investing in Digital Financial Services. That is a treaty that basically ensures that a lot of the ethical practices are maintained. Yet somehow we're seeing that is an international standard of financial services, and we're seeing companies like Tala and Branch, or rather investors of Tala and Branch, not being signatories of those such treaties, such useful treaties. So do we genuinely feel like we're really going to venture into that space of regulating if such regulations, international treaties, are being defied at face value?
I think it being the start of the whole conversation, you know, just taking root in the country, we have to go through these hardships, honestly. It's the bedrock, you know. And of course, most of these things are never hard won.
Yes.
You're not just going to start a digital lending space or in anything that has been proposed. It's very hard for you to just start and be perfect, you know. So of course, in the short term, we'll undergo this, I'd call them tides. Well, no, these are the waves mostly. So
those waves are expensive.
yeah, they are
well,
huge.
if you're borrowing 1,000 bob and you're paying 14, that's 400 bob more expensive.
Exactly, exactly. And now that's going to be in the short term. At some point, we will have to force these organizations and their partners to come on board with it. Because at the end of the day, it is for the betterment of the people of the country and for people generally around the world. So in the short term, we will have to persevere. But the fact that such questions are being raised, motions are being put in place, will definitely lead to a better outcome.
Now, Charles, let me take you up on something you said. He's talked about the short term and the long term, yeah? But here are the repercussions for the short term. As of 2021, 4 million Kenyans have been blacklisted by virtue of not paying back amounts to your digital lenders. Some could be as small as 500 shillings. There's a Twitter user who said that he was blacklisted, of course unverifiable, but he was blacklisted for not paying a shilling, yeah, to the CRB. Wow. So ideally, when you are blacklisted, you're not accessing credit for up to 5 years. This is a country that is very heavily whose economy is very heavily invested in SMEs and micro banks, or rather micro businesses, a lot of which operate on a debt structure. Yeah. So what does that mean for this current generation when we say let's persevere? So by 2022, proportionately, we're looking at 5 million, 6 million Kenyans. What does this mean for a country when it comes to SMEs and their ability to borrow and further their businesses, yeah, 5, 6 years from now? Which is actually why, in the beginning of the conversation, I proposed that if we had an ombudsman, you know, someone or a body that could investigate all the claims. Because of course, being listed on CRB for such amounts, that does not make any good sense, you know. It does not promote the welfare of the person or the welfare of the economy. So if we had an investigative body, that would definitely lift the load of many Kenyans when it comes to being blacklisted on CRB. And also, as the obligation of CRB, it shouldn't be to scare the people, you know, oh, I'm going to be listed on CRB. Can be say you'll be listed there, you will definitely lose your cool. Yeah. The whole idea of CRB should be, hey, we want to ensure that we are protecting our people. You know, we're protecting our organizations, our banks, not punishing people every single time. So if we have a space where CRB and our digital lenders are working together, and also I remember Mr. Njoroge also pointed out that at least as a first-time borrower in these digital lending spaces, it would not make sense for you to be blacklisted over not paying, you know. They should increase the periods, the payment periods, you know. So all I'm saying is it's going to be very interesting. The short term is going to be interesting. I'd like to hear, do you feel like being in that space where we are having so many young people blacklisted, because of course you're looking at a lot of these people who are borrowing are in the youthful population. These are people who do not have access to financial literacy, or they do not know how they're paying back, but well, it's money, it's confirmed you have received. So the idea is, do you feel like that then impacts our ability to grow as a nation whenever it comes to debt, whenever it comes to accessing debt, especially for people who are going into businesses?
Yes, it does, highly. If you look at the documentary that was done, Debt of Shame, and you saw how those people are talking, right? And one of the guys was saying, Yako blacklisted CRB. He does not understand what that means, but aliona wako wengi. So, you know, we have this mindset of, okay, we don't really understand. It all comes down to financial literacy, by the way. We do not understand what it means to be on CRB, what are the repercussions of being listed on CRB, and therefore, we just don't care whether I'm listed or not. I just don't care. I needed money, I got the money. So it all comes down to both the state, our government, and these financial lending apps coming together and, you know, actually telling people before you get a loan, hey, this is it. If you don't pay, this happens. And if this happens, A, B, C, D, you know, so that the moment you go there, you know very well that if I don't pay, I'm going to be listed in CRB. That is why people are scared to borrow from banks. because who wants to build a house and then the bank comes and just repossesses your house, you know? So we know very well what are the repercussions of failing to pay a bank loan. And if the same could be done, I'm not saying to threaten or something, but if the same could be done when it comes to digital lending, then I think would be at least a step away from where we are. So it all comes down to how much information do you have? How well have you digested the information that is given to you regarding the terms and conditions, regarding the repercussions, and yeah, everything that surrounds money lending.
It's interesting what you said at the beginning of this conversation. You talked about the element of good debt. Yeah. So of course you cannot take away from what digital lenders have done. There's people who will genuinely use your typical digital lending platforms for matters like, say, for example, you know, like your typical mama mboga. So what do you feel can be done better to ensure that these spaces are protected, not just for digital lenders, but also for Kenyans, such that we're seeing an environment where everybody thrives?
Well, one, I'd definitely pick up on what she said, and that is the education aspect of it all. You know, once the people really understand what good debt is, you know, a majority of Kenyans actually view debt as, unajua tukisema in Kiswahili it sounds worse, deni. Ukisema good debt, okay, but deni sounds like a really bad thing.
Yeah.
So just educating people, for starters, that hey, these loans actually, you could take them to build up your business, to build up your rapport in terms of your credit worthiness, you know, so it can afford you the luxury of a bigger loan in the future. For them to be protected, that would be the first step, I believe. The second step would definitely be to partner with other bigger lenders, if I may say, financial institutions. And this is just to understand where have these guys gone wrong in terms of, you see the big banks that we have, the process is quite tedious to get a loan. You need to have an account with those guys. You need to have collateral. You know, these people are doing it in a very convenient way. So how can they borrow some mechanism that bigger banks use to provide the same good debt to the common mwananchi, you know, for the betterment of the growth of the country? And I believe after that, things will definitely start unfolding.
Very positive outlook from Charles. This is not bad. We have good debt. What do you feel on the other side of the room? Do you feel what do you feel can be done in terms of ensuring that these spaces are safe for Kenyans? Because of course, like we said, we cannot take away from what exactly the good altruistic intentions are. What do you feel can be done to ensure that we achieve that level of coexistence between both your typical run away from debt people and your digital lenders?
It's just, for me, it's teaching it in a way they can understand. I like what he said, building credit worthiness. If you tell a Kenyan, ni deni, it's something wrong. You know, you tell them, if you don't pay, we're going to have a problem.
Okay, but if just student scenario.
Yes. But if you bring it from a point of, the more you take the loan and build your credit worthiness, the more you can get in future, and you can be able to get, you know, build more businesses, you can be able to pay school fees with more money, you know, university fees. The moment you teach them in a way that they can understand, or rather, let me say, tell them what they want to hear, then people will be more receptive. That's the truth. Because from everything, as in, there is so much you could get from that 15-minute interview with that guy on the news, and it's just that everyone is threatening him. You know, everyone is calling the family members, is calling the girlfriend that the guy has a loan. But if before you give him the loan, you don't threaten them that if you don't pay, we're going to do this, and bring it from a point of the more you pay, the more we can give you, then trust me, a lot of people will be more receptive to such a positive outlook, as opposed to, you know, a negative outlook of the whole debt situation. So it comes down to education, and it comes down to Kenyans being able to understand the laws and the safeguards that are already there for them. And if they're enlightened on that, then they'll be more sharp when it comes to reading the terms and conditions and just getting themselves into debt.
Okay, in 1 minute, your parting shot as regards digital lending generally and lending spaces. From an investment perspective.
Strictly.
Feel free.
Yeah. Wakenya, tusikate sherehe na madeni. I learned that the hard way myself. But for sure.
There's a story you're not telling us.
I know.
It's for later days. That's one. The second one is, when it comes to taking on debt, let's be very vigilant and very wise. You know, we have chamas, we have circles.
Yes.
I believe those are better.
Yes.
As of now, they are better than digital lending spaces.
Alternatives,
Yes, so let's take the debt and now grow ourselves, for sure.
Okay, so in short, usikate sherehe na you can also go to a SACCO, you can also go to alternative lenders. What is your perspective, or rather, what is, in 1 minute, your parting shot on the same digital lending?
Mine would be simple. No one is going to teach you, clearly. And everyone who wants to teach you has an ulterior motive. As in, as a business, I want to make money.
We don't. So, here at Debate Circle,
Yes,
we are just chasing
exactly.
an informed citizenry.
So, it's you to play your part. Inform yourself, read, watch the Debate Circle. We do it for free. You know, there are so many YouTube videos, there are so many online contents that you can read and educate yourself on money and digital lending and when it comes to debt. So just take that initiative. Don't wait for them to give you terms and conditions. Don't wait for them to come and explain to you what the law says, because they'll explain from their perspective. Learn it from your own perspective.
All right. That has been the conversation from us here at the Debate Circle. But before we wind up, there's something interesting that I would want to throw your way. I'd want to hear what your perspectives are on the same. In some element called corporate political activity, where essentially we see corporate or rather we see the corporate world and the politics world merging to form one thing. In this element, or in this space of discussing digital lending, I'd like to bring to your attention the fact that we're having a situation where one of the biggest lenders in the digital market is also partly owned by the government. So ideally, you're having people who are top shots in the government owning a very significant share of what is the biggest digital lending platform in the country. What are some of the controversies you feel like that raises when you're discussing matters regulation? Is that possibly the reason why we are not regulating such spaces? I'll leave that as food for thought. We are still waiting on some of these people who have been harassed. Kama Okash imekutafuta you and your relatives back at home, by all means you're waiting to hear those stories. But that is it from us here at the Debate Circle. You have other questions or comments, we'd most definitely love to read them in the comment section below. So be sure to drop them, but from us here, it is goodbye. Until next time, thank you so much for coming to the show.
Thank you.
All right.